rising inflation, threats of invasion, market trepidation. We'll talk about all these things and more in tonight's edition of the Crypto Pro News. What's up, gang? It is I, Carlton Flowers, your Crypto Pro. Yay! And tonight, we are going to talk a lot about the current events and the effect on the cryptocurrency market while I have a hot cup of coffee. Woo! So as I said in the introduction, there's a lot of stress out there and a lot of worry and concern with these world events and how it will affect our portfolios. So we're going to talk about a few things, and my goal is to boil it down plain and simple where everyone can understand generally what this means and how it affects the markets. So let's start it off with a very interesting story. Oh, that coffee's good. And I'm sure everyone has heard a little bit about this. The Department of Justice arrests a New York couple and seizes $3.6 billion in Bitcoin from a hack that occurred in 2016. And so as it turns out, I did a little digging on this, and this couple was involved in money laundering, the very thing that we don't want Bitcoin to be associated with. So apparently they were funneling laundered money into Bitcoin and then creating hundreds of wallets to split the Bitcoin up into and then transferring to other accounts so that they could cover up the tracks and throw the feds off the trail over where the money came from and where it ended up, with the goal of disallowing the government regulators to be able to track them down and realize exactly what they were doing. So back then, the amount of money that they stole, the Bitcoin that was seized, was worth $71 million. Now, in today's term, after Bitcoin has gone up in price to its current price today of $42,000, that $71 million is worth $4.5 billion. That's a lot of money. Now, both of the husband and wife the couple has been charged with money laundering and conspiracy against the United States. It's likely that they're going to be serving a really long sentence. They will be incarcerated for a long, long time. So they're going to have to be used to prison food and 4 walls and some bars. Okay, so this is the largest financial seizure ever. In the history of the Department of Justice, they've never seized this much money. And there are rumors that are floating around on Twitter saying that the BTC that they seized could be sold on the market, which would cause a huge market crash. Now, if they sold 3.6 billion of BTC, they're saying that the price of Bitcoin could go down 90%. But we know that the Department of Justice is not going to sell that money. Now, we also have heard that they're not giving it back to the Bitfinex exchange because the Department of Justice, the U.S. government, does not like Bitfinex. They think that the owners of Bitfinex are crooks. And so that money is going nowhere. And I think it'll be a long time before they decide what to do with that Bitcoin. All right, let's keep it moving. Next, we have a story about the feds. The feds add billions of Bitcoin to the balance sheet. Well, what's a balance sheet? It's a sheet of paper that lists your assets and your liabilities, and it balances it out. So if you've got this much in liabilities, you need an equal amount in assets to zero out. And you want to have more assets than liabilities, because when you have the reverse, you have a financial problem. Okay, so here's how this relates to Bitcoin. In October, the Fed's assets grew by a total of $162 billion. And that's the biggest monthly rise since the year 2008. When the Federal Reserve starts buying treasuries to dump money into the economy, they're trying to spur growth. They're trying to get things going and make the economy a little bit more robust. And there are those of us who believe that whenever you get that kind of spending, whenever they're fattening up the balance sheet and throwing money out of there and buying tons of treasuries, the word is that they're anticipating something bad to happen, like, say, what's going on in the stock market right now today. So last October, when they were saying that there was a crisis going on with banks where they were under the threat of not being able to pay off their short-term loans, where they lend each other money to make their own reserve requirements, where you have to have so much money on hand to balance off so much debt. They were saying that there was going to be a big collapse of banks, kind of like a domino effect, because the banks lend each other money to meet the reserve requirements. And whenever you have the feds buying tons of treasuries to dump money out on the market, maybe it's happening to avoid a banking crisis. So anyway, some say that with the feds adding the Bitcoin, that helps the balance sheet, because they're not losing that money because it increases in price. It's like gold. So this is the digital gold. And while we saw the feds last year talking bad about Bitcoin, we saw that as soon as the new administration came in, they went from putting down Bitcoin to purchasing mining equipment and actually mining Bitcoin in Washington, D.C. I believe that to be true. So Bitcoin is possibly a hedge against inflation, number one, but it's also a hedge against monetary and fiscal indiscipline. In other words, our government can't be trusted with the money that we print. We have no discipline over fiscal circumstances. So when we invest into BCC, that can offset how irresponsible the government is in printing trillions of dollars and deepening the national debt and destroying the value of the dollar. All right, so this could bode well for the Bitcoin price, because that would lock up a very large amount of Bitcoin. And now the government is positive about Bitcoin, which would lessen the chances of them cracking down with some ridiculous regulations against us cryptocurrency owners. Now, prolonged QE, which is quantitative easing. That's what you call this whole situation of the feds buying treasuries and dumping money out into the economy to spur activity. Prolonged QE may force stock market investors into Bitcoin. Why? It's because of the devaluing of the dollar. And so while they're watching the stock market take a serious plunge, it's going down, right? We're on a spiral downward. We're seeing the S&P 500, the NASDAQ, the Dow, we're seeing all of them taking a beating right now. And so the big stock investors feel like they're losing value. But then they're looking over here at Bitcoin gaining value and also considering it as a hedge against inflation, kind of like gold, but the digital gold. All right, moving right along. Russia and Ukraine committed to honoring the Minsk Accords, and negotiations may advance. Well, if you're not watching TV for the last 24 hours, you might be happy about that. And if you have been watching the news, you know that this story that I put together a few days ago is now out of date. But before today, what was going on? The president of France, Emmanuel Macron, was working with the Ukraine and Russia, And he had brought up the fact that we need to honor the Minsk Accords that I believe were put in place in 2016, I think it was. And he was talking about the possibility of negotiations advancing being a reality. And it looked good, it felt good, and it eased the uncertainty of the crypto market and the stock market and world economy as a whole. Now, with this type of news, that would help to push this Bitcoin cryptocurrency market back into a bear market. It would allow us to grow. But now, with today's news, we're hearing that invasion is imminent, unless Biden can talk Putin out of it. And they're saying that there could be a Russian invasion of the Ukraine within the next 24 to 48 hours. Now, we see on this map here, all of the green dots, those are Russian armed forces encampments. And it has grown since this map has been created. There's even more. They're farther, closer up. And then we've got this area where there are dual languages being spoken, where there are Russians here speaking Russian and also Ukrainians. They want this area really bad, from what I gather. But there are even more troops than what are depicted on this chart here, and they're closer to the borders. So the country is completely surrounded, and it's not looking good. The one good thing is that President Biden said that the United States will not get involved militarily. And I'm like, thank goodness for that. I don't want to see U.S. troops in this area and another war breaking out. That would be a massive escalation, a conflict of World War III proportions, and we don't need to see that. It's sad to see what's going on and knowing that there would be many Russian casualties and even more Ukrainian casualties, but it also is, at least we get some amount of reassurance knowing that it's not going to escalate into a world war. But hopefully all we can do is pray that President Biden and Putin can sit down and really think this out, and we can hope that what Putin is saying is that we're all overreacting and that it is a lie that he's going to invade. Let's just cross our fingers and hope that's the case. But I think some of this news is definitely affecting the markets. Here's something else affecting the markets. Okay, China is planning to break up Evergrand. And this is trying to stave off one of the biggest bankruptcies that we have ever seen, failures of a property development company or a company as a whole in the history of the world, really. So the goal is of containing the property crisis within the country of China and not having that spill over and topple real estate prices and markets worldwide. And so the proposal calls for Evergrand to sell the majority of the property assets. China would be buying those assets, and this could lessen uncertainty in the market, which would also allow crypto to continue to grow. Now, they're saying that this would prevent a collapse of the world's most indebted developer. Now, this would cause a domino effect, which would have far-reaching negative consequences. Now, it doesn't mean that China is going to be buying all of the assets, because there's certain things. I think they've got like an electric car portion, charging, some services that they're actually not going to bail that portion out, but like 80% or 90% of it is going to get bought out by the Chinese. Now, even though China is going to break this up and buy all of these parts of it, there could be an effect on Tether and the cryptocurrency market. Why? It's because Tether has a very healthy percentage of the backing of the US $1 to $1. For every one Tether, there's supposed to be a $1 US backing. But there's not enough US dollars that they have in banks to back every Tether. In fact, it's only 30% backed by USD. The other 70% is on paper. Now, what does that mean? Paper could be represented in various assets. You could have stock paper, ownership of stock. You could have deeds to properties or ownership in other companies, okay? All of these things that are generally, they go up and down in value. So they claim they have enough paper, assets on paper, to cover for that 70% that is not USD in a bank. Now, what happens when a significant portion of their assets on paper happens to be ownership of Evergrand stock or properties. Now, I'm going to guarantee you when the Chinese buy and break up and then buy portions of Evergrand, the money that they're going to get for those pieces is not going to be the full value of what it was if the company did not go under. So that could have a ripple effect and have a negative impact on Tether. And then if the New York Attorney General, who doesn't like Tether, decides they want to jump on and audit them and make them prove that they still have enough paper assets to cover after this mess unravels, it could affect the price of cryptocurrency, okay? Because if there's a shortfall, that would mean that those who are behind Tether would have a reason to tank the cryptocurrency market in order to make the impact a lot less or bring down the cost of shoring up the shortage of the assets that were backing the one-to-one to the Tether tokens. All right. Does that make sense? Let me know in the comments if that makes sense. Now, last but not least, we got two more. Here we go. Inflation is skyrocketing. The Fed's now hawkish. Okay. Now, I'm bringing this up for a reason because last week, everyone was saying that the Feds are going to be dovish. They're not going to be hawkish and increase rates a very large amount. It should only be maybe 0.25% at a time because they don't want to damage the markets. That's what everybody was saying. And that was when everyone was also saying that Bitcoin has entered a new bull market and everything is going to the moon. Well, next we get the report that the inflation rate, the amount that we have grown, is now at 7.5%. That was the number turned in for January after all of the calculations were done and the data was collected. And that's the highest that it's been for 40 years. It is the fastest 12-month gain since 1982, leading into 1983, I believe. And James Bullard, who is actually the president of the Federal Reserve Bank of St. Louis in the great state of Missouri, where I reside right now. I'm in the capital city of Jefferson City. James Bullard said that he's dramatically more hawkish now that we have gotten these numbers in over there. Dramatically more hawkish. Now, what happened to all of the dovish predictions? Let that be a lesson learned that a lot of times we hear people repeating these things and it's just an echo chamber of people putting out there what they want to hear. And then when reality hits, boom, this is what we get. So what it means when we say that the Federal Reserve is dramatically more hawkish, it means that they're much more open to raising rates in a much more aggressive manner than what they would have before. So now we are hearing talk of a rate hike of 1 full percentage by July 1st. All right, moving right along. One other piece of news. This is what we'll end this report on, and we'll call it a night. And feel free to chime in the comments and let me know what you think of these general reports. Market takes a hit after bullish projections. Now, this is my title. This is not something I gleaned off the internet or, did research on. This is my own observation. So Bitcoin and the crypto market are in red after piles of negative news have come in over the past several days. But the point that I want to make is, which is a lesson learned, is that in the last couple of weeks, we have had an overly bullish sentiment. But what happened? We went from people saying that Bitcoin was going to crash and go all the way down to 30,000, 20,000. Some even said 14,000, and there was even talk of 10,000. Within a few weeks, they turned right around and said, no, that's off. All bets are off. Bitcoin is going to the moon. Now it's going to race to 50,000, and then it's 100,000 within reach. And we are in the all-out bull cycle, the last cycle of this market. Now, no sooner than everyone flip-flopped the first time, they just flip-flopped again. Now, the overly bullish sentiment and projections have completely reversed, and there's people out there on YouTube and in news reports stating that Bitcoin is now going to go back down to 30,000. What's the lesson that we can learn from this? When the majority of people think that the market is going in one direction, the market will reverse and do the opposite. When we have an overwhelming consensus where 95% or higher think that it's blue skies ahead, we get hit with a black swan event. And whenever we're moving down and people think, the majority of people think that we're only halfway to the bottom, that's when we get a skyrocket out of nowhere where short sellers are liquidated and the exchanges that provide leverage trading make billions of dollars. Okay, so altcoins are taking a beating. Those are all of the crypto projects outside of Bitcoin. But Bitcoin is only moderately down right now. It's not really that bad. The last time I looked at the chart here, it was at about 42,000, I think. But there's a lot of altcoins that are going through a lot more pain than that. So anyway, thanks for watching, and congratulations if you made it all the way to the end through my stumbling and bumbling. But this is something new to me, the Crypto Pro. I want to continue doing this. And the target audience, the focus of this is for your friends and family members that don't understand cryptocurrency. They have no idea, but they're interested. So I'm trying to educate them, my family members, on what can affect the cryptocurrency market, so then they understand when they bought that first $100 of Bitcoin or $200 of Solana, only to see it go down by 50% within the first few days, so they can understand how world events and domestic events can influence the crypto market. Like and subscribe if you have not already done so. I have a goal this year that I want to 10x the subscriber base of the Crypto Pro channel, and there is a reason why. I want to do more of this, and I want to cut back on my consulting work and all of the other things I do to pay for those shoes that the kids need. But in order to do that, I'm going to have to build up a substantial income from YouTube to replace that money that the opportunity cost takes away from me from spending on the YouTube channel. So you can help me by doing that by liking the videos, telling a friend, subscribing, and telling another friend. So that's all I have for tonight. Thanks again for watching. This is Carlton, and I am out.